Hello and welcome everyone. I am Santosh Baliga, and in this lecture we are going to discuss about topic of Nidhi Company. This is a type of company which is created for mutual benefit of its members. So first let us understand the gist of the working of a Nidhi company. Then we will dive into the Companies Act 2013, its provisions and its compliances also. Okay, so in case of Nidhi company, say there is a company which has been created, which is a Nidhi company. Okay, this will be created by members. These members basically would be depositing money which is in the form of their savings, okay, to this Nidhi company. Okay, now this Nidhi company will in turn give to its members loans whenever they require it. So this is a basic structure where members of the company deposit money into a Nidhi company. The Nidhi company in turn gives loans to the members themselves. So it is, when I say it is a mutual benefit company, mutual benefit society kind of a company, that means it is used for the members by the members. So the members would be depositing money into the Nidhi company, and the Nidhi company will be giving loans both to the members of the Nidhi company. Okay, so Nidhi company would not even take deposits nor give loans to any outsiders other than its members. This is the basic structure of a Nidhi company. Okay, this Nidhi company is basically covered under section 406 of Companies Act 2013. Okay, so have you understood till here? This was the basic concept. Let us now get into the provisions, hardcore provisions of section 406, understanding what actually is a Nidhi company, how to incorporate a Nidhi company, what are the compliances which are required, and what are the provisions which have been provided. Okay, so first of all, the definition and the core objective of Nidhi company. Legal basis is, again, as I told you, section 406. Primary objective, this is very important to understand. What is the primary objective? See, it has been created by the members for the members only. Okay, so the primary objective is to cultivate the habit of thrift and savings among the members. What do you mean by thrift? Thrift means like an quality of, say, cautiously spending, or we say in Hindi फिजूल खर्ची कम करने की आदत या कम करने की क्वालिटी. ओके, दैट इज नोन एज थ्रिफ्ट. तो ऐसी क्वालिटी को क्या कर रहा है, ये कल्टिवेट कर रहा है, एंड इट इज ऑल्सो गिविंग एंड encouragement फॉर इट्स members टू सेव मोर मनी. Okay, so once the members deposit, they would be getting some interest rate on that deposits, as well as in terms of loan there will be some interest rate which will be levied on the members, but such interest rate would not exceed the RBI rate. So if you now understand, there are two functions that a Nidhi company is doing. One is deposits and the second is loans. Okay, now which other entity is there which does this kind of activity? First of all, both these activities are finance activities. Okay, these are financial activity. Other than this, there are banks, which is an entity which does this kind of an activity. This Nidhi company comes under the category of sort of NBFC. NBFC means non-banking financial company. But since it is a Nidhi company, it's a very small company for micro savers as such. So the RBI regulations are also relaxed. RBI regulations. Okay, we will learn all these things now. So again, the mutual benefit principle, I just explained it to you. It is by the members, for the members. That means it is for the mutual benefit of the members itself. So it receives deposits from and lends money to its members only for their mutual benefit. Okay, this concept is clear now. Now, Nidhi Company is a type of non-banking financial company but is largely exempted from RBI's core regulations because it deals exclusively with its members. So RBI has more regulations when the company or an entity deals with a public at large. Over here, the Nidhi Company is a very micro company catering to micro savers, and it is only catering to its members, not to the public at large. Okay, so the RBI regulations are quite relaxed in terms of Nidhi Company, but you have to remember that it is a type of non-banking financial company which is an NBFC. Okay, now since it is an NBFC, it is only catering to its members. The Nidhi rules, rules 2014 under Rule 6 has given some general prohibitions. Such kind of activities which the Nidhi Company cannot enter into or cannot be doing. Okay, so Nidhi Company is strictly prohibited from carrying on the business of chit fund. So it cannot carry on a business of chit fund, hire purchase, leasing, or insurance. These are 4 activities which are specifically has been prohibited. First is chit fund. Okay. Second is hire purchase. Third is leasing, and the fourth is insurance. Okay. Apart from this, the Nidhi Company can raise finance through deposits as well as by issuing equity shares, equity shares, but it is prohibited to issue preference shares, debentures, or any other debt instruments. So preference shares it cannot issue, debentures it cannot issue, any other debt instruments also it cannot issue, but it can issue equity shares. Okay, this is understood. Now next is all the members will have only savings account. Okay, and they cannot open any current account where they get any kind of overdraft facility for their business facility. That they cannot get under an Nidhi Company. Accepting deposits and lending money to any person and other than its members. So as we already spoke about this, the concept of mutual benefit of its members. Okay, of its members only. Okay, next is pledging any assets lost by its members as security. Now say when the company is giving loan to its members, it can take security from its members. Security may be in the form of some asset, security may be in the form of some gold also. Okay, and such asset which has been received by the company as a collateral security to the lending which has been done, that cannot be pledged by the Nidhi Company. Okay, paying brokerage incentive for mobilizing deposits. So for increasing the deposits, they cannot pay brokerage or incentives to any brokers, agents, or any middleman who brings such kind of deposits. Okay, so these are the general prohibitions. This is a very, very important part. Okay, now let us now understand what are the exemptions which have been given. What are the exemptions which have been given under the Companies Act? Okay, Companies Act 2013. So first one is whatever deposits have been received by the Nidhi Company, whether it will qualify as a deposit under section 2 subsection 31, which then ensures that there are a round of compliances as per chapter 5, which is acceptance of deposits. So there is a very heavy compliance which has been provided in chapter 5, which is acceptance of deposits. Compliances are such as credit rating, deposit insurance should be there, different form filings are there, public circulars have to be given. Okay, so whether this deposit that is received by Nidhi company, whether it qualifies to be under the topic of deposits in the Companies Act section 73 to section 76A. So since it is a Nidhi company, section 406 and its rules and regulations have clearly exempted such deposit to not be part of section 2 subsection 31. So the chapter 5 and its compliances or regulations will not be applicable to any deposits which has been received by an Nidhi company. Okay, so explicit statutory bypass, any amount is accepted by the Nidhi company in accordance with the rules made under section 406 is explicitly excluded from the standard definition of deposit under the acceptance of deposit rules 2014. So this is one of the things, deposit compliance is exempted. Okay, next is, in case the company tomorrow the Nidhi company wants to raise finance in terms of by giving or issuing equity, then in that case the section 62, which is basically an section for regulating further issue of share capital, that also will not be applicable to an Nidhi company. So the provisions of section 62 are applicable to all types of company except Nidhi company. Okay, next is relaxation in terms of meetings, notices of meetings under section 101 and under section 136. Now over here what has been provided is that if the company, the Nidhi company, has such kind of members who have more than 1000 rupees as face value of shares or 1% of total paid up share capital, then in that case you will have to give individual notices. You will have to give individual notices as is required under these sections, like any normal company. But the exemption has been provided in case the face value is less than 1000 rupees and the total paid up capital percentage of the total paid up capital is less than 1%. These are also called as micro holders. Then in that case the individual notices have been exempted. And what the company will have to do is that it can give a public notice. It can give a public notice in local district newspaper as an advertisement, plus notice board affixation at the registered office is sufficient. Okay, so this is the exemption which has been provided for notices of meeting. Okay, now the next one is section 108 exemption is talking about voting by electronic means. See, the big companies, it is easier to have such mechanisms of electronic voting mechanisms and systems and everything, but for a small company like a Nidhi company, it becomes a very expensive affair, and hence Companies Act realizes this and it has given exemption to the Nidhi company. So it is not required to have e-voting mechanism. Next is in terms of dividend. There is a capping which has been provided. So a Nidhi company can give a maximum of 25%. Maximum of how much? 25% of dividend for the year. So whatever the profits or free reserves the company has, out of that maximum 25% can be given as dividend in a financial year. Okay, not exceeding that. So that is the Nidhi company's exemption, or you can say a capping. This is a restriction. Now over here, any company, normally a general company, section 124 deals with the dividend part of it. And over there it is given that within 30 days dividend has to be given. If it is unpaid, then it will be transferred to unpaid dividend account within 7 days of lapse of 30 days. Okay, and then it will wait for 7 years and then it will transfer to the IEPF account. Okay, but in case of Nidhi company, it is very, very simple that within 30 days if it is unclaimed, then it will be directly paid to the account of the member which has been maintained in the Nidhi company. Okay, so it is direct credits of dividend. Okay, so this is also very clear. So these are the different exemptions that we have already spoken about. Just go through this table, you will be able to recollect whatever the points we have discussed so far. Okay, so now we go to the last part of this topic, that is the compliance and filing of forms. Okay, this part has a very important amendment over here which I am going to cover, so stay tuned to this last part also very patiently. Now the forms that have to be filed by the Nidhi company are basically NDH1 to NDH4. Okay, now first of all I would like to discuss NDH4, which is the most important part, Okay, now as per the amendment in 2022, what has happened is that every Nidhi company post its incorporation within 120 days has to fulfill a set of conditions and file a form, that is NDH4, with the central government. Okay, that is the regional director which will act on behalf of the central government. Now the central government will then decide whether to approve the incorporation of a Nidhi company or not. Okay, now once it approves, then only the Nidhi company can start accepting deposits and start its business of lending money to its members. Okay, now let us first understand what are these conditions which are being given, and we can call them as pre-commencement or post-commencement conditions or requirements also. Okay, so first let us understand the post-commencement requirement, and there is a small process to it, so I will explain it to you in very simple language. Okay, so post-commencement requirement needs to be fulfilled. Now time period, what is the time period within which it has to be fulfilled? It has to be fulfilled within 120 days from the date of incorporation. Okay, that's the first point. Now this is as per the amendment in the Nidhi Amendment Rules 2022. Okay, now this is actually, if you want a rule number, then it is under Rule 3B, I think. Rule 3B. Okay, that is not important. You do not have to remember the rule number. Just understand the conditions and remember the conditions. Okay, the very first condition, see, a Nidhi company is a public company. Okay, and it can be incorporated by only 7 members also. By how many members? By just 7 members. Okay, but this condition says that over a period of within a period of 120 days, the company shall have at least 200 members in the company. At least how many? 200 members in the company. This is the first condition. Second condition is that net owned funds of the company shall be at least 20 lakh rupees. It shall be at least 20 lakh rupees. That is what NOF means, net owned funds of the Nidhi company. Okay, this was previously 10 lakh rupees, and as per the amendment it has been increased to 20 lakh rupees. Okay, next is fit and proper criteria. All promoters and directors must meet integrity standards. That means the promoters and directors of the company, the Nidhi company, should fulfill the criteria of fit and proper criteria as per the central government. Okay, so their integrity level has to be high, their reputation standards has to be high. Okay, and it has to be maintained. They should not be having any offences booked against them. Okay, so these are all characteristics which are required for fit and proper criteria. Okay, so these 3 conditions, if they are met, okay, what are these 3 conditions? First, membership at least 200 members, net owned of funds at least 20 lakh rupees. Okay, and fit and proper criteria of all the promoters and directors of the company. If these 3 conditions are met within 120 days, within how many days? 120 days, the company shall file form NDH4. Which form? Form NDH4 with the central government. Okay, once it has filed with the central government, the central government will verify and declare within 45 days. So central government, that is the regional director, has 45 days to approve the application. Okay, so if it approves within 45 days, then the company is now declared as a Nidhi company, and it can start accepting the deposits and continue its business for its members. Okay, but if the central government rejects the application of the Nidhi company, or the company fails to file the form NDH4 within the stipulated time of 120 days, then in that case the company cannot continue as a Nidhi company and not accept any deposits. Okay, this part is also clear. So what this also tells us is that till the company does not get a approval or declaration from the central government, till then it can not start off its operations also. That means it cannot accept deposits till it gets the approval from the central government. Okay, and what is the time period that has been provided over here is 120 days for filing of the form and maximum 45 days for the central government to approve or reject. Now in case if central government does not respond within 45 days, then it would be deemed to be approved. It would be deemed to be approved and the company can then continue as an Nidhi company. Okay, this part is also clear. Now there is one more scenario, that if the company does not fulfill any one of these conditions or any of these conditions, which conditions? Three conditions, these three conditions, then in that case the company can file form NDH2 for extension of time period. So company can ask the regional director of the central government through an form NDH2 for extension of time period to fulfill this three conditions. Okay, this is also clear. So form NDH4 is clear, the most important form. Okay, and for extension NDH2. Is this clear? Now let us get into the compliance part once again. NDH2 and NDH4 we have covered now. NDH1 and NDH3 is basically annual return, which has to be filed within 90 days of the end of the financial year, and half yearly return within 30 days of the end of the each half year. Okay, so NDH1 and NDH3 is basically returns, annual return and half yearly return. Okay, that sums up the kinds of forms that has to be filed by the Nidhi company. Okay, now there are a couple of more points that I want to discuss, other requirements which the Nidhi company has to fulfill during its operations. Number one is deposit ratio has to be maintained to the net owned of funds. Just now we saw one of the conditions, net owned funds has to be at least 20 lakhs. So the company has to maintain deposit to net owned funds ratio of 1:20. Of how much? 1:20. That means no Nidhi company can accept deposits exceeding 20 times its net owned funds at any point in its operations. Okay, so if I have to write over here, no Nidhi company shall accept deposits exceeding 20 times of its net owned funds. Is this clear? Next, last point is that it is the unencumbered deposits. Okay, has to be maintained by the Nidhi company in term deposits within an scheduled commercial bank. So it has to maintain in an scheduled commercial bank term deposits such as FDs and deposits of at least 10% of its outstanding deposits. So the amount of outstanding deposits with the Nidhi company, out of that at least 10% has to be kept in term deposits, and the rest 90% can be used for operations. Is it clear? So these are the different requirements, compliances that a Nidhi company has to fulfill. Okay, so I hope you have understood the Nidhi company concept very, very clearly. I have tried to incorporate as much rules which I have found to be important in this particular lecture itself. So I hope it has been useful for you. If this lecture clears your concept of Nidhi Company, if it has helped you in some way, then do give a like to this video, share it with your friends, and subscribe to this channel, please, because that is how I get motivated to bring more and more videos. So this was the last video in terms of types of companies. I have covered most of the types of companies. Please go through all the videos. It is crisp but detailed explanation covering all the important points within the provisions of the Companies Act. Okay, so that's it from me for this particular lecture. We'll see you in some other lecture very soon. So that's it. Bye. Take care.